You need to stay alert to what's unfolding right now because the market is flashing signals almost everyone is completely overlooking. And let me be absolutely direct. If you're only listening to permabulls or soaking up hopium takes at this moment, you're setting yourself up to get blindsided hard. We're seeing macro pressure building in Japan, global liquidity tightening, huge liquidations ripping through the crypto space, and commentators like Tom Lee calling a bottom even as the actual data shows the opposite. I'm not here to sugarcoat anything. What's happening right now is exactly the kind of setup that appears right before the real opportunities emerge. Before diving into XRP specifically, we need to be brutally honest about the environment we're operating in. Today alone, over $125 million in crypto liquidations slammed the market in under an hour. Bitcoin slipped to beat 90K again. XRP followed, and the structure looks nearly identical to the final cooling stages of earlier bull cycles. Anyone insisting this is the bottom isn't paying attention to the charts or the macro conditions fueling this volatility. You do not magically bottom while liquidity is tightening. Markets simply don't operate that way. And the biggest pressure point isn't even the US at the moment, it's Japan. Their bond market is sending signals we haven't witnessed in more than a decade. Yields are climbing. The Bank of Japan is openly prepping markets for another rate hike. That alone is enough to trigger global deleveraging. And if you're wondering why that impacts XRP or Bitcoin, the explanation is simple. Tighter liquidity and leverage markets equal forced selling. When Japan tightens, global liquidity tightens. When liquidity tightens, risk assets pull back. It's mechanical, not emotional. Here's the truth. You're not watching some secret collapse or hidden catastrophe cycle. You are watching a macro repricing event. And this type of environment has consistently created the best accumulation opportunities for people who actually understand what's happening, rather than panicking or clinging to narratives. If you actually want to survive this market and not get obliterated by it, you need to stay locked in because the setup forming right now is textbook, and XRP will follow global liquidity whether people want to admit it or not. Now let's cut through the noise and get into why this volatility is happening, because most people are getting emotionally shaken out without any understanding of the mechanics behind this entire move. The liquidations we just experienced aren't random. They aren't market makers hunting stops. They aren't some secret XRP suppression conspiracy. This is a macro-driven deleveraging event directly connected to Japan's policy shift. And if you ignore this, you're going to misread the entire cycle. Japan's bond market is flashing signals that historically come right before tightening across global markets. Their 10-year yield is pushing levels that traders under 30 have never even dealt with. When a country holding more than $9 trillion in government debt and decades of ultra to loose monetary policy starts hinting at rate hikes, every risk asset on the planet feels the impact. This isn't an XRP issue or a crypto issue. It's pure liquidity math. Investors unwind carry trades, dump leverage positions, reduce exposure to volatile assets, and the shockwave hits crypto first because it has the thinnest liquidity. It's brutal, but it's predictable. This unwind is also hitting at a moment when global markets were already stretched. People have been treating this bull cycle as if we were already deep into full quantitative easing. But we weren't. We were still in QT. Liquidity was contracting, not expanding. And while influencers kept predicting parabolic breakouts, the actual indicators, M2 growth, cross-border liquidity flows, credit spreads, repo conditions, were telling a completely different story. If you want to understand crypto, you must understand liquidity. Everything else is just noise. And then comes the structural problem, crypto leverage. The moment Japan signaled tightening, over-leveraged traders got obliterated. Longs began getting liquidated, creating cascading sell-offs. Bitcoin dropped. Altcoins exaggerated the drop. XRP reacted exactly as a liquid mid-cap asset should during global tightening, sharp move down, mechanical, not emotional. This is why relying on permabull narratives always destroys investors at these moments. Markets don't move on hopium, they move on liquidity. Now let's address the elephant in the room, the reverse carry trade narrative and the absurd XRP $1,000 predictions floating around. The reality is yes, the yen carry to trade unwind is real. Yes, it influences global flows. Yes, it affects liquidity conditions which spill into crypto. But no, it does not automatically catapult XRP vertically or push it to some fantasy price overnight. A macro unwind does not equal an instant XRP moonshot. XRP's liquidity model, use case, and settlement speed make it relevant in FX conversation, but not in the exaggerated, unrealistic way people are pushing right now. You cannot base investment decisions on internet hype. You base them on liquidity conditions, data, and historical patterns. So what does all this mean for XRP holders? It's simple. You're in the part of the cycle where fear and impatience create opportunity, but only for people who actually grasp what's going on. We're watching the exact pattern we've seen in previous cycles, a break below key moving averages, a shakeout driven by macro tightening heavy liquidations functioning as the clearing mechanism, and a final bottom forming when liquidity stabilizes. None of this is unusual unless you only follow charts without macro context. Stay focused. The real opportunity arrives when liquidity returns, not when emotions are running wild. Here's where most crypto investors, especially XRP holders, completely misinterpret the environment. They think price movements are controlled by narratives, tweets, influencers, or isolated announcements. But at this moment, the only driver that matters is global liquidity. And until people internalize that, they'll keep getting blindsided. Let's talk Japan because that's the spark. The Bank of Japan's signaling rate hikes is not a small development. It's not just another headline. Japan is the world's largest creditor nation. Trillions in capital flow out of Japan into global asset markets because borrowing yen has been incredibly cheap for decades. That cheap borrowing has been the silent oxygen feeding everything: equities, real estate, bonds, and yes, crypto. When Japan tightens, that oxygen gets cut off. Investors unwind trades, repay yen-denominated loans, and slash leverage across the board. This is why markets, especially high volatility sectors like crypto, get slammed immediately. You don't need conspiracy theories to explain XRP dropping. You need to understand macro mechanics. Let me be clear. This is not a crypto crash. This is a liquidity contraction. And liquidity contraction always hits the weakest leverage first, which is why you saw Bitcoin longs liquidated, altcoins melting faster, XRP dragging down despite strong fundamentals, and whales repositioning rather than exiting. This is the same pattern before macro bottoms in 2019, 2020, and even during COVID. Except now it's linked to Japan instead of the US Federal Reserve. But the effect is identical. Now about the reverse carry trade narrative. People are acting like the unwind directly pumps XRP. No, that's shallow thinking. What the unwind actually does is destabilize global liquidity. XRP is connected to the global liquidity system, but that doesn't magically turn into an instant explosive price move. That's not how institutional settlement works. XRP benefits when liquidity expands, not when liquidity evaporates. And this is exactly where inexperienced investors get destroyed. They confuse macro tightening with fundamental failure. They misinterpret volatility as a broken use case, and they view liquidity-driven sell-offs as proof XRP is done. They are wrong across the board. If anything, this is the precise environment where long-term accumulation quietly takes place. When the dust settles, when liquidity stabilizes, and when QT flips into QE, that's when the real explosive setups form. But expecting that during a global liquidity crunch is completely unrealistic. Here's the brutally honest truth. If you can't handle macro-driven drawdowns, crypto, especially XRP, is not for you. The major moves happen after liquidity returns, not during tightening and deleveraging. So ask yourself, are you reacting emotionally to short-term price noise, or are you positioning logically for the conditions that actually drive parabolic cycles, QE, liquidity injections, and capital inflows? Because the people who understand this aren't panicking, they're preparing. Now let's shift from opinions to evidence. If you look at historical data, not Twitter fantasies, not influencer nonsense, not emotionally driven speculation, the pattern we're in now resembles every major liquidity-driven correction that occurred before massive macro recoveries. 1. The Bank of Japan is initiating a global reset, and no one wants to accept it. Japan is preparing to raise rates to 0.75%, the highest level since 1995. That alone can blow a hole straight through global liquidity. Why? Because Japan funds the world. Hedge funds borrow cheap yen and invest it into higher-yielding assets. Stocks, real estate, bonds, crypto, all thrive under that system. Now reverse it, the yen strengthens, leverage positions must be unwound, assets get sold, liquidity evaporates. This is not a crypto-specific issue, it's a global money problem. When liquidity contracts, every risk asset gets damaged. Bitcoin bleeds first, altcoins bleed harder, highly leveraged markets get wrecked. XRP wasn't targeted. It didn't fail. It simply got caught in a macro hurricane. And here's the twist. Japan tightening historically comes right before massive global easing, meaning this pain is not the ending, it's the signal before the expansion. 2. Historical patterns show that every end of QT leads to irrational price surges. Look back at 2019. QT ended, markets dipped, liquidity returned, and Bitcoin moved from 3K to 69K in one extended cycle. What you're witnessing today is the exact same setup. QT ending, liquidity draining, markets flushing leverage, a macro bottom forming. People screaming XRP is dead now are the same ones who sold Bitcoin at 3K before it rallied 20 times. They simply don't understand macro timing. 3. The crypto market is not crashing, it's deleveraging. There's a gigantic difference. A crash happens when fundamentals break. A deleveraging event happens when liquidity dries up temporarily, causing forced selling and liquidations. Today's sell-off was caused by over $600 million in liquidations, whale repositioning, DeFi pool stress, confidence shocks, and tightening from Japan. None of these signal a broken crypto ecosystem. If anything, it's the ideal setup for a macro bottom. 4. Stop believing fantasy narratives. XRP is not going to $1,000 while liquidity is contracting. This is where honesty matters. People claiming the carry trade unwind will rocket XRP to $1,000 overnight are living in pure delusion. Here's the reality. Liquidity contraction hurts prices. Liquidity expansion fuels rallies. Institutional settlement rails do not moon in tightening environments. The carry trade unwind strengthens XRP's long-term case, not short-term price action. Anyone saying otherwise is selling dreams, not truth. 5. The real opportunity isn't today, it is the post-liquidity expansion window. Smart money doesn't buy during the pump. Smart money doesn't buy when the herd is euphoric. Smart money buys when liquidity is squeezed, when fear dominates, when markets capitulate, and when entries become generational. We are entering that window, not exiting it. You want brutal honesty? Here it is. If you're not preparing now, you will regret it in 2026. QE, rate cuts, liquidity injections, and institutional pipelines create the perfect environment for XRP's real move. Not right now. Not during Japan's tightening. Not while global liquidity is evaporating. But after the reset. This dip is the setup. The breakout happens when the liquidity engine restarts, and every historical indicator points directly to mid-2026. At this stage, anyone clinging to the belief that XRP will moon during a liquidity crunch is either delusional or being misled. The truth is much simpler. Every major crypto rally in history followed the same sequence. Liquidity dries up, leverage flushes, sentiment collapses, smart money accumulates quietly, and when QE returns, everything explodes far beyond rational levels. We are currently inside the flush and accumulate stage, and whether people accept that or not doesn't alter the outcome. Japan's tightening is not the end of crypto, it's the cleansing phase before the next liquidity wave. And if you understand that, the next 12 to 18 months become the single most important accumulation window of your financial life. This is where most retail investors lose. They panic in volatility, sell bottoms, chase pumps, and ignore macro triggers because they prefer fantasies of instant riches. But the people who build generational wealth do the opposite. They embrace the pain. They understand liquidity cycles. They accumulate when everyone else is drowning in fear. That's why the wealth gap keeps widening. One side reacts emotionally, the other reacts strategically. And a strategic side is positioning right now. Not because they expect an overnight miracle, but because they know the liquidity engine is preparing to reverse. And that reversal, QE, rate cuts, fiscal stimulus, is when XRP will finally trade on fundamentals rather than fear. Institutional rails, ETFs, settlement systems, and Ripple's decade of infrastructure will matter again. The explosive move everyone imagines doesn't happen in tightening. It happens when money creation restarts, when liquidity floods the system, when capital desperately seeks yield and speed. That's 2026. Everything happening now is merely setting the stage for that outcome. So here's the uncomfortable truth. If you're not preparing now, if you are not refining your strategy now, if you're not thinking 12 to 24 months ahead, you're going to watch the biggest macro-driven crypto expansion of your life from the sidelines. You need capital ready, you need conviction ready, and you need emotional discipline. This is not the moment to fold. This is the moment to get focused. The market is giving you a second chance most people never get. Don't squander it. And as always, this is not financial advice. This is educational content based on macro analysis and historical patterns. Do your own research, make decisions aligned with your risk tolerance, and never invest blindly. The opportunity is real, but the responsibility is yours.